Hey everyone, and welcome back for another deep dive with us. We've been getting ready for a potential economic downturn and trying to figure out how to protect our wealth from inflation in 2025. And today we're taking a look at this source, Top 5 Investment Strategies to Beat Inflation in 2025. It has a lot of good information, but we've weeded through it and pulled out the most valuable, actionable nuggets just for you.
This source is great because it doesn't just offer one-size-fits-all solution.
Yeah.
It really recognizes that everyone's financial situation is different and their tolerance for risk can be different too. So it lays out quite a few different approaches, which I think is really valuable.
Absolutely. And that's what we're all about here at the Deep Dive, giving you the tools to make the best decisions for your own situation. So let's jump into it. First up, we have something pretty familiar, real estate. We hear all the time that it's a classic hedge against inflation.
Well, and there's a good reason for that. They aren't making more land. It's a finite resource. And that scarcity plays a big role in its value. Plus, building costs tend to go up right alongside inflation. And that, of course, pushes property values up even further. So if you're looking for a tangible asset that has a history of appreciating real estate, it's definitely worth exploring.
Yeah. Now, I know what some of you might be thinking. Buying property is a huge investment. And you're not wrong. But this source also mentions REITs, which are real estate investment trusts. Think of them like a way to get into the world of real estate without needing a ton of cash up front.
Exactly. With REITs, you're basically buying into a collection of properties that are managed by professionals. It's a much easier way to get started in real estate. And you get instant diversification because you're spreading your risk across multiple properties.
Okay. Let's move on to something a little different now. Let's talk about commodities. I have to admit, I laughed a little bit when I read this part in the source. It said, gold isn't just a shiny metal, it's a hedge against inflation. Kind of cheesy, but true.
Yeah, it is. What we're talking about here is the idea of intrinsic value. Commodities like gold and silver and oil and even things like agricultural products all have a fundamental worth that holds up even when currencies are fluctuating. It's like a safety net when things get a little shaky economically.
Makes sense. And it's not just about gold. There's a lot of different commodities out there. The source points out that adding them to your portfolio can help balance things out, especially if you have other investments that might be more vulnerable to inflation.
Diversification is key. Spreading your risk is one of the most important parts of investing. And commodities are a good way to do that in a unique way, especially when you're specifically trying to protect your wealth from inflation's effects.
Okay, next up is a strategy that might make some people nervous given the current economic climate: stocks and dividend-paying companies. I know some people get nervous about stocks when things feel uncertain.
I understand that. But the important thing to remember is that stocks have the potential for long-term growth. We're talking about growth that often beats inflation rates. It's about thinking long-term and not getting scared by short-term market swings.
Exactly. Plus, there's also the whole dividend thing. Remember, you're looking for financial stability, and dividend-paying companies can offer just that: regular income from your investments. It's like a little extra that helps you deal with inflation.
Now, the key here is to choose companies with a solid track record. We're talking about stable earnings, consistent dividend payments, that kind of thing. It's not just about chasing the highest yield. It's about finding reliability and sustainability. And, this brings up a question. How do you find those companies? Well, doing your research carefully and maybe even talking to a financial advisor can help you make informed decisions.
So we've covered real estate, we've touched on commodities, and we've even braved the world of stocks. But there's still more to this source. Are you ready to keep diving in?
Absolutely. Let's see what else this source has for us. It's interesting how many different tools there are out there to help you navigate the economy. And speaking of tools, the next strategy in this source is something called Treasury Inflation Protected Securities, or TIPS for short.
TIPS. I'm not really familiar with those. The source mentions them as being low risk and adjusting with inflation. That sounds pretty good, especially for someone who's more on the cautious side.
Yeah, for sure. It can be a great option, especially for people who really want to play it safe and aren't comfortable with a lot of risk. So basically, the principal value of a TIPS is linked to the rate of inflation. As inflation goes up, the value of your TIPS goes up too. This gives you a level of protection that you don't get with regular bonds, because those can actually lose value when there's inflation.
Oh, that's interesting. So it's like your investment keeps up with those rising prices.
Exactly. And even though the returns on TIPS might not be as high as some of those riskier assets, the peace of mind they offer can be worth a lot, especially when the economy is uncertain. The source even specifically points out that TIPS are good for conservative investors.
Okay, last but not least, we have to talk about cryptocurrencies. This is a topic that always seems to get people talking. Some people think it's the future of finance, while others aren't so sure.
For sure. And this source does a good job of looking at both sides. It acknowledges that crypto can be volatile, but it also says that crypto could be a hedge against inflation. Some people even call it like a digital form of gold. But just like with any investment, you have to be careful, especially with something as new and unpredictable as crypto.
Right. The source really emphasizes how important it is to do your research. If you're thinking about investing in crypto, you have to make sure you're using reputable exchanges.
Absolutely. And remember, the potential rewards can be high, but so are the risks. Cryptocurrencies are still pretty new. And we don't really know for sure yet if they'll be a good hedge against inflation over the long term. It's something to watch closely and think about carefully. Don't just jump in without doing your homework.
So we've covered a lot today: real estate commodities, stocks, tips, and even cryptocurrencies. It's a lot to think about, but hopefully this is giving you a good foundation for protecting your wealth from inflation.
I think so. And if there's one key takeaway from all of this, it's that diversification is really important.
Yeah, it really is. It's like, don't put all your eggs in one basket, right? We've talked about real estate, both the traditional kind and through REITs. We looked at commodities and stocks and even took a look at cryptocurrencies. They each have their good and bad points, and they each come with different levels of risk.
Exactly. There's no one perfect investment that will always do better than everything else, especially with how unpredictable the economy can be. The important thing is to find strategies that work for your own financial goals and your own risk tolerance. It's about making a portfolio that can get through those tough economic times and helps you reach your goals.
I like that, a portfolio that's resilient. This deep dive has definitely given our listeners a good place to start when thinking about these decisions. But like always, we want to leave everyone with something to think about, some food for thought. So what's your final thought for us today?
Well, we've talked a lot about the future. It's about 2025 and beyond, but sometimes it can be helpful to look back to. I would say try spending some time researching how these different types of assets have performed in the past. Like, how did real estate, commodities, stocks, and TPS during times when there was high inflation? That kind of historical perspective can help you understand which strategies might work best in 2025 and beyond. When it comes to your finances, knowledge is power.
Absolutely. Understanding the past can help us make better decisions for the future. So there you have it, a deep dive into top 5 investment strategies to beat inflation in 2025. Hopefully you got some good information and tips to help protect your money. Remember to diversify your investments, research carefully, and try to get some historical perspective. Thanks for joining us for this deep dive, and we'll see you next time.